capital market probe, and a lot seems to have happened ever since then. But this time we're joined by Professor Awosika. She's a professor of business and economics at the University of Wisconsin. Thank you for coming on this morning.
Thank you for having me.
Well, it's interesting, the goings on that particular probe, but we do have a report about this, so we'll just let you listen to this, perhaps take them back to back as well, and then we'll take it from there.
The central bank guaranteed depositors in all of this. The central bank guaranteed depositors their deposits. And except you tell me what else the job of Securities and Exchange Commission is, which is what I was hoping you would say, I will believe and continue to believe that the job of Securities and Exchange Commission, as far as this matter is concerned, is investor protection. Do you agree or not, or disagree about the fact that the job of SEC should be investor protection in a case like that?
Honorable Chairman, I want to confirm that the SEC did not neglect to carry out its duty of investor protection. And what I have attempted to do is to explain to the Honorable
My
Committee...
question, your explanation has taken on. I put it to you, ma'am, that as far as those banks that were nationalized by the CBN are concerned, you neglected or refused to do the job which you ought to have done, which is to guarantee investors' investments.
We are guided by the International Organization of Securities Commissions, which all security commissions around the world, I shouldn't say all securities commissions that cover 95% of the capital markets around the world are part of the International Organization of Securities Commissions. In 2010, following from one of the lessons from the financial meltdown, there was an agreement that in addition to prudential regulators like central banks, that securities regulators are also responsible for systemic risk issues. So in addition to our role as a securities regulator, we're also responsible for systemic risk issues. We're also, in Nigeria, a member of the Financial Sector Regulatory Coordination Committee, which is the financial sector wide regulatory coordination body that coordinates the activities of financial regulators in Nigeria. We're also, in the conduct of our activities, as you know, guided by the Investment and Securities Act, which covers issues related to market integrity. We're guided also by the Code of Corporate Governance. We're also, in the conduct of our activities, as you know, guided by the Investment and Securities Act. And therefore, as a regulator, we must make sure that we protect all the investors in Nigeria in a transparent manner and in a fair manner.
Okay.
The actions we took in this respect was along those tenets which are guided by the Investment and Securities Act.
So would you say, ma'am, that the investors in those nationalized banks were protected?
When an investor makes an investment decision to invest in a company, while I as a person, given my background, would like to make sure that at every point in time that they make a positive return on their investment, it's indeed the responsibility of that investor in that case. So as a regulator, we cannot guarantee that you will always make a positive return on your investment.
But
what we can guarantee is that we provide the environment to ensure that you will not be defrauded.
I like your answer. Beautiful.
Yes.
Where you go into a company to invest, you bear the risk of probably profiting or losing. But it doesn't also include where government by itself decides to nationalize the company and declares your shares as invalid. That is completely different from what we're saying.
Madam DG, this is to you.
Nothing could have prepared members of the committee for the opening comments of the Securities and Exchange Commission Director General, who seem to have come very much prepared.
Now I question, Honorable Chairman, your credibility in carrying out this public hearing. The reason I question your credibility in carrying out this public hearing was that on October 20th, the SEC gave you ESTO code and a business class ticket to travel to an emerging market conference in Dominican Republic. Please tell the Nigerian people whether you actually went there. In asking the SEC to contribute 39 million naira to this public hearing, do you think that it undermined your capacity? I do not think you have given me a fair hearing. I do not think, Honorable Chairman Hembe, that it is appropriate for you to have gotten information from the SEC and without even asking us to verify that information, to respond to the issues, that you then make the judgments that you made yesterday. It's been 2 years and a few months that I'm still standing, that I haven't been killed, that all of the shenanigans so far has not affected me. But I think that because the integrity of the apex regulator of the Nigerian capital markets is so important, it is very important that I state this fact very publicly. And I believe that if we want to carry out an investigation, and as you said, in the interest of Nigeria and not in your own interest, I should not be subjected to what you subjected me to because the SEC did not give you 5 million naira in cash on Tuesday the 13th of March. It should not be.
Let me start responding to issues from the bottom up. I'll start from the, there are 4 of them, right? 4. You're talking about Deputy Speaker, Committee collected 5 million, we requested 39 million.
Sorry.
Please hold on.
I did not say the committee collected 5 million.
Put up your microphone.
No, but I'm questioning your credibility
to chair. Please. Fundamentally, like every other thing that is happening here, it is being recorded verbatim and will be taken into account at the point of making the final report. I will take into account the fact that I collected money. I'm alleged to have collected money to travel, and I didn't travel. That requested for 39 million from SEC for this public hearing, and that yesterday or the day before we collected 5 million. Okay. Oh, we asked for 5 million. Okay, I did. And then that I asked for 5 million, and that the Deputy Speaker, his wife works with the Nigerian Stock Exchange, and his auntie is also the Ndi Okereke, who was formerly in the stock exchange, who you probably have issues with, so the house cannot be properly said to be fair. Those will be taken into consideration to check whether in doing what we are doing today, we have been affected by such bias. The public is also watching. If what I am doing is because of the fact that I collected money from SEC to go on an overseas trip to study and I didn't go, which is why I'm doing what I'm doing, the public will take note.
Ms. Ote went ahead to clarify the issue of her competence, which had been called to question the day before.
I'd like you to please explain to me whether if I go through first the process that I have gone through to be considered for this job, including a confirmation by the Senate of the Federal Republic of Nigeria, that it is appropriate to say to me that you consider me incompetent without even considering my own credentials. Is it fair that in 1984, I graduated with a first-class honors degree in computer science from the University of Nigeria, Nsukka, that I was the best graduating student in physical sciences, and that after that I moved to the UK, worked in the UK in consulting, did my degree at the Harvard Business School, got a master's in business administration. Following that, I was a funding officer covering capital market transactions across the world, including in this continent, in Asia, in the Americas, raising money, managing multi-currency portfolios as an investment officer, running the trading room of the African Development Bank, managing a multi-currency portfolio of $10 billion, managing a foreign exchange portfolio. When I was funding officer, managing the funding program related to certain currencies, that I then was appointed. And in each of these instances, I was actually interviewed with staff within the African Development Bank and outside of the African Development Bank. And I was appointed the group treasurer of the African Development Bank, which meant that I was most responsible for the investments across the world.
The face-off didn't end there. She described the hearing as a kangaroo court.
The late President Yaradua then invites me to serve my country and to bring the skills that I have both from within Nigeria and outside of Nigeria to bear to this role and to bring my integrity. Is it fair, Honorable Chairman, that therefore you will now try to damage my own reputation because I want to serve my country? Is it fair, given what we have done in the last 2 years to restore investor confidence, that you want to crash our market in this way, Honorable Chairman? I have humbly described what I have seen over the last 2 days as a kangaroo court. Not even in Idi Amin's Uganda did we have this kind of session.
Those who were expecting fireworks from today's session were certainly not disappointed, and from all indications, the high drama may continue on Friday. Esther Ubudaga, Channels Television News.
Well, the chairman of that committee eventually said that, she's got to come up with documents, letters signed by himself to show that he actually did request for that money, saying he will not be stupid to go ahead and do all of those which he's been accused of. But it's supposed to be the capital market probe. Wait a minute. It is the capital market probe. Well, Professor Awosika, how does all of this look to you? Because, people get confused as to what exactly are they supposed to be looking out for now?
First of all, I think this probe should be handled carefully because the whole world is watching. Our markets are at stake. And if we don't do this right, even though we've been around, the stock exchange has been around for 50 years, we're still a developing market. And if we start, proceedings like this that has no solid background to it, we are inclined to damage the market. The stock market is, let me use an analogy that I believe the average Nigerian would understand. Sports, football. You are betting on a team. Two teams are playing, and you're saying Team A is going to win. So I'm putting my money on Team A. If you do that without knowing what the team can do, you just threw your money away.
Without match fixing.
Well, yeah, I'll get to match fixing.
Okay.
Now, if you know this team very well, you know how they play, if they tell you their lineup, you can tell how many goals they're going to score, you've been following them for years, and you even know the team better than the coaches do, and you put your money on it, you're making an educated guess. It's better than the gamble that you did when you didn't know the team. So they play, and the scores are out, and you lose. Would you go to the NFA and say, I want my money back? You can't. What the NFA is going to do, is supposed to do for you, is to make sure that the teams play fair. Now, if they found out that the match was fixed, then they need to jump in and jump all over those people. And then put regulations in place in the future to make sure that such a thing doesn't happen again. That is the role of the SEC. They are not like the NDIC where they have to protect your investment up to a certain limit. If I save so much, I put so much money to a bank and they fold up, then I'm expected to get so much back. So that the situations are very different. If you if you ask the average investor if they've ever picked up the financial report of any of the companies that they invest in, I bet you half of them would say no. And even if they did, they wouldn't know what to do with it. But nobody should invest on the stock market without knowing what they're investing in, without knowing the companies very well, without looking at their financial reports over so many years, making sure that behind this company there's solid management, there are solid processes, they have integrity, and there's transparency, and I can gladly put my money in there.
But again, Prof, who should be doing that for the investor? Now we know, according to what you've just explained, it shouldn't be SEC, but we hear about stockbrokers, stockbroking firms. So if I go to anyone, who should be the man or woman telling me what exactly I should know about where my money is?
The stockbroker. That's their responsibility. If people can invest now on their own. You can get on the internet and buy shares if you want to. However, if you want guidance and advice, then you need to get a stockbroker. I mean, stockbrokers specialize. They manage certain funds. You need to pick a stockbroker that manages the kinds of funds that you would like to invest in, because people should have preferences. There are some stocks that I would not want my money to be put in. So I should tell my financial advisor, please don't put my money in XYZ company or industry. So they should be the ones to guide you if you can do the research yourself.
So how do you mean when you say the world is watching, we should be very careful, even though we've done, let's say, over 50 years, a little over 50 years in the stock market, we should be very careful?
Because of sensitivity. The stock market is there are three stages of efficiencies that a market could be in. There's the weak form efficiency, strong form efficiency, and the efficiency determines how much information you have on the market. And sometimes you say something and the market immediately reacts to it. So it's quite possible that people who have even been thinking of trading on our stock exchange are watching this and they're thinking, my goodness, they don't even know what they're doing. I mean, I don't think I want to move my funds into that economy, because if these are the people that are going to manage it, and then I don't have the confidence, that they will be properly managed. So the sensitivity of information to stocks is very critical, and so even this probe is going to have people sitting and watching what the Nigerian market is going to do.
When you gave the analogy with sports, what you painted is what should obtain ideally. Maybe in the last 50 years, up to about in the 2000s, year 2000, maybe broader now, maybe we had that kind of ideal setting. But somewhere along the line, we began to experience a boom, as it were, especially with the consolidation of banks. When they started talking about having just 25 banks, which must have a certain capital base, and then all the banks went to the stock markets, and before you knew what was happening, the share prices were soaring high. And we all trusted the professionals, we trusted SEC to protect us, we trusted that there was fair play in that particular sector. But as it has played out, it seems that that fair play wasn't guaranteed, as it were. There was plenty of match fixing, if you like. And, at the end of the day, the investor lost money. But, yes, that era passed, we want to believe. And then, the new SEC DG was brought in to restore some sanity into the market. With all of this background, would you believe that this probe has do we have reason to hold this probe?
Frankly, I don't think we do. That's my position, and I may be wrong. because if the free market is the free market, then it should be left alone. So that when I put my money in a company, I mean, my position with our banks and their shares over the years is it's empty. I believe I've said this before. The financial sector is supposed to be, the strength of the financial sector is supposed to be backed by a very strong industrial sector. We don't have that. So when somebody goes out there and says, my shares, the shares of my bank is, so much, and we believe him, the thing is, what is the basis of the strength?
But why shouldn't we believe them? I mean, banks have finished the year ends with fantastic profits. I mean, some just declared their profits and we're saying 60 billion naira. This is not putting a question mark on it. But if you see the financial report of a bank being that strong, why wouldn't you want to put your money there?
Well, if you put your money there because of what you see, without doing your research about the true state of those banks, I call that greed. I'm sorry. We see the money, it looks like they're doing great, but we don't do the investigation. A lot of these banks, what I found out when I talked to people, a lot of these banks actually had forced their employees to buy their shares.
Really?
And these are some of some of them, when you come to borrow money, you're asked to back your borrowing with shares. Who backs something solid with paper? Now, when trading goes on, the price of your stocks go up. It's demand and supply. The more people come out to want it, the more, the higher the price goes. The higher the prices go, the more profitable they look.
If you put a big question mark on, on the financial year reports of the banks, I mean, if you say that it might not be what it seems, and so you should be careful when you're putting your money there, doesn't that put a whole question mark on our regulatory process?
It probably does. And I want to believe that is why they brought a new administration in. And so questioning what didn't happen when it was supposed to happen. And so, yes, there's a problem there. If I was in the position of the SEC CEO at that time, I would caution the people the same way that I'm doing now. Because you don't want to just ride on paper information. You have to do your research.
I mean, we know capital is a coward. It flees when it's threatened. Now, in this probe, because there are those who are looking for instance, they say the stock market is predicated on market fundamentals, psychology, globalization, and macroeconomy. How would you recommend or suggest regulatory authorities in this probe go beyond all of this and demonstrate to the people that the capacity is there and we're doing the best we can? Because the people who are looking, as you say, to come in and invest, and if it continues like this, they'll be disappointed.
Well, the first thing we need to do is public education. The financial IQ of the average person, not just a Nigerian. The financial IQ of the average person is somewhat low because we're not trained to think the way the stock market works. We need to educate the people. We need to police the companies that are listed on our stock exchanges. We need to put a bite into sanctions that are supposed to be meted out to companies that misbehave or that defraud.
Tell us more about the policing. You talk about to police the companies listed in stock exchange. How do you police that? Is it
that's the work of the SEC.
Good.
That's what they're there to do. they are the ones that will watch out for fraudulent practices, for lack of integrity in listings, and they are the ones to mete out the sanctions. If I don't know if you've heard of the Sarbanes-Oxley Act in the U.S. That came out of the unethical behaviors of managers in companies like Enron, and what the SEC did was to put an act, a group together. They came up with an act that now requires all executives to be aware of what they're doing financially, what their company is into financially, because the excuse back then was, I'm not the CFO, so I'm not supposed to know. So now you're supposed to know. If you don't know, you're going to jail. So policies like that, acts like that, would help to police these companies.
Well, the way it is now, is it rather too late for us to say what has gone down can be salvaged, because now it's so public? And if we're to go with what you just said about being in the eyes of the world, and how the information we get is quite sensitive to the market, how can we reverse the trend and ensure that that confidence that was once with the investors can be brought back?
Well, I think we would look at this, and we actually should have looked at this before now, because they've had the market crashed in 2008. This is 2012. So it looked like we made progress since 2008 to now. Now, when we go back to dig into what happened between 2001 and 2008, we are airing our dirty laundry at a time when now we've gotten a new washing machine, and it's doing the laundry for us, as it should. And so we need to just support.
I think that's where the controversy has come in, because it doesn't seem like members of the Pro panel are convinced that from 2008 till now we've done what we ought to have done. Or let me say 2010, because I think that's about when the new Sec DG resumed her post. Till about now, it doesn't seem like the SEC has done what it ought to have done. Do you buy that viewpoint?
Frankly, I don't, because I don't see where the panelists come up with expectations. What are the expectations put on this new management when they started, and did they meet it, or have they fallen short of where we want them to be? I think we've fared very well, especially in terms of what's going on the whole world with the economic crisis all over the world. Even though we're right in the middle of what's happening in Nigeria, and we think it should be better, but it could be worse. And so not actually plunging us back into 2008, in my opinion, I think is progress. So every little step that we make beyond where we were in 2008 is progress. And so we need to support this regime. We need to, there should be accountability.
Now you're talking about accountability, because from what we've gotten so far from that probe, we haven't actually gotten anything with regards to the stock market itself. So people have been asking and a little bit worried. When we first heard the bogus news that the market is about crashing from that same panel, we thought that we were going to get facts and figures and some kind of evidence concerning that particular statement, but what we get to hear is about some personalities, some spendings by individuals. How does that relate to this market that we thought was going down?
It doesn't, because it's looking like what it looks like to me is witch hunting, because we don't have anything solid. It's different from the oil probe. It's even different from the pension probe. We knew what was wrong. We knew what we wanted answers to, And those questions were put to those individuals and those companies that, why did you do this? Why are you doing that? And what steps have you taken? Nothing like that is coming up here. It looks like a personality clash to me. We don't have the interests of the people at heart, because if we did, we'd have, like you said, facts and figures that these CEOs and MDs could now come up and refute or confirm for the people to know. So far, I just think it's drama. We have not heard anything. I haven't heard anything that's going to help me as an investor.
To think that they've got 2 weeks to go the whole hog in this matter.
And 1 week gone.
Oh dear.
Yeah, but the thing is, what are we looking for? They don't seem to know what they're looking for. Terminologies are used, and they don't even get it. They don't understand it. The interpretations that they give in some of these statements are not on the money. There are certain things that you should know when you're chairing a probe or you're part of a probe. There are certain things that you should know. So you don't come up and ask that person to tell you, and even if you do ask them to tell you, you already know the answer. And so you know how to further probe that person. If they're going to come out and tell you stories of what's happening in their organization and you don't have anything to counter it, then I think it's a waste of time.
This has further bring to question those who man some places. Now, you've been around where we go through all of those. For instance, you work with some presidents of your organizations in the U.S., and when you have your committees, and they're specialized committees, who are those that are supposed to be in such specialized committees? For instance, we're talking about some kind of medical committees. Should you get someone who doesn't have a medical background to be a member of such committee?
No, that would be a big mistake. Otherwise, how do they have a good understanding of what the committee is supposed to be doing, of what the committee is supposed to be looking at? You have to have a specialist in that area, at least even several specialists, so that when you there's value in people arguing back and forth, because we know what we're talking about, and this is my position, your position is different, and we have an interchange, and we arrive at a consensus at the end of the whole process. But if I have no clue as to where the head is versus where the feet are, and you put me in charge of a medical committee, you just set us up for failure. So typically, you would have a specialist.
Looking at all that's going on, to put it mildly, all the mudslinging, can you see anything that you can take with you to say, well, I know you've already said you don't exactly support this probe in the very first instance, but has anything come up that you say, that doesn't really sound quite right? For instance, yesterday or 2 days ago, it came out that, the DG of SEC had members of support staff in our office that, were affiliated with a bank, in fact, on the payroll of a particular bank. Would you say that was an error in judgment, or was that, does that matter at all to the daily run-ins of the SEC, but they're supposed to be regulating what happens at the stock market?
I don't think it does. I would want to be talking to those people. They got us where we are in the first place. And I wouldn't want to have an inside version of the story that they have to tell. And, they're part of the financial system in this country, so they need to be a part of it.
Who's that?
The representatives of the banks or the financial.
Well, they work in the office. So I think what they were trying to point out is that if you're supposed to be regulating a body, that's the Nigerian stock market, the capital market, that's got the shares of those banks, do you think that their loyalty will lie first with you or their banks, assuming they have any information that could be of harm to their own bank, as it were?
Well, I don't think... we're looking at the SEC as representing or working for the banks. The SEC is looking at the whole capital market. The capital market includes other industries besides the financial institutions. And so even if they had any kind of influence, now it's a little tricky because the banks are the ones that we look at in this country because they're big and they're the ones making the money.
And they were the culprits in the very first instance.
Exactly. But if you're going to fix something, you need to be talking to the people who broke it in the first place.